At Russell Investments, we believe financial advisors have never been more valuable. So let's bring the value of your advice into clear focus. Our value formula is as easy to remember as ABC. Let's take a look. In a volatile year like 2020, the value of active rebalancing really stepped into the limelight. Over time, the persistent strength of certain sectors can cause an unrebalanced 60-40 portfolio to suddenly drift and become more like an 80-20 portfolio. This could have lasting consequences for an investor's risk allocation. In basic terms, we believe that active rebalancing may help increase return and manage risk. Does that tip the scales for you? Scales, rebalancing, get it? We all need a little coaching, but the value of your behavioral guidance really came into focus in 2020. Remember February 19th? That's the day the S&P 500 index closed at a record high. But by March 23rd, it had dropped by 33.8%. Well-coached investors who stayed in the game would have seen the market rebound by 17.6% in the following 3 days and return 18% for the full calendar year. But lacking the guidance of an advisor, many investors sold low. In fact, $335.6 billion were pulled out of U.S. equities in March. A good coach would have called foul on that play, or at least yelled at the ref. Like this, "Come on, ref!" If an investor wanted a cookie-cutter investment experience, they could simply use a robo-advisor at very little cost. But each individual investor is, well, individual. And that's why we believe that the customized client experience that you can offer has significant value. So make sure that your clients are aware of all of the qualitative and the quantitative custom planning that you may do for them. If your greatest value depends on building deep relationships with clients, then here's a simple question. Doesn't manually researching and combining individual products into portfolios actually hinder your ability to build those deep relationships? Have you considered a more efficient way to align products with client goals? Have you considered model portfolios? Imagine if using model portfolios saved you 7.7 hours per week. Over the course of the year, that would be 385 hours, freed up for you to be able to deepen relationships with your most valuable clients. They would feel so loved. They can practically feel it already. Do you feel it? I feel it. Why should we be concerned about tax management? Because taxes can impact returns. Our research shows that in each of the 5 years ending December 31st, 2020, investors lost on average 1.74% of the return that they earned on standard U.S. equity products that don't pay attention to tax consequences. Let me put that into context. That 1.74% return give up, that's larger than the total fee most advisors charge. Just that difference between the average tax drag of 1.74% and the tax-managed drag of 0.54% is 1.2%. For clients, that's the value of working with a tax-smart advisor. Besides, who doesn't like to disappoint the IRS? Every now and again. At Russell Investments, we believe in the value of advisors. And the numbers back up our belief. We see the potential advantages that you create for your clients. And we know the commitment that you bring to your relationships. We have never seen your value more clearly. Or we could, if I could just get the smudges off these glasses. Hey, Sophie here. If you want to learn more about the value advisors offer, click on the link.